Odo, this really has nothing to do with your investigation.
Good. Then you won't mind giving me the name.
I'm sorry. My friend is married. I won't drag him into this.
Prepare for a shopping experience that's out of this world at the official Star Trek shop. Check out exclusive products.
They have this the Sesame Street segment called "One of These Things is Not Like the Others." Bitcoin, but as a form of commerce. Volatility is your friend up and down. If Bitcoin goes up and you want to sell some Bitcoin to buy a house, you can, but you also don't panic and sell Bitcoin when it drops. You accumulate more. You ultimately have strong hands. You never panic. You never sell. You buy when it's low rather than selling when it's low. In that world, it's also not a hedge. So it can't be a hedge if you don't have knowledge, and it's way more than a hedge if you've started to figure out the true signal. So these are some of the fundamentals. So I'm going to go through some of the fundamentals that are happening in the world of Bitcoin. I'm going to talk about what's happening in the world of the dollar, and then I'm going to kind of get to the end state of my economic thesis to Bitcoin. So when people see that the price of Bitcoin is, quote, crashing or declining in the face of inflation, on the left side, that is the Bitcoin mining hash rate. That chart is going up and to the right. One thing that you might notice is this dip in the middle, and that's when China banned Bitcoin. But despite China banning Bitcoin, over the last 5 years, the Bitcoin mining hash rate has increased by 9 times. There's about 4 or 5 gigawatts of power right here in the state of Texas that are securing the Bitcoin network. That is a fundamental signal that says the Bitcoin network is not just more secure than it's ever been, but that the rate at which capital is being deployed to secure the Bitcoin network is increasing at a rate faster than it ever has been before. And those projects are multi-billion-dollar projects. Those are not people buying and selling Bitcoin and day trading like degenerates. On the right side of the page is the growth in the Lightning Network. The Lightning Network, for those of you who are not familiar, is a payments layer that's designed to scale Bitcoin payments. While someone might look at it and say, well, there were only 7 million transactions in August, this is a new technology that is nascent. 2 years ago, that number was in the low 100,000s. So what's happening right now from a fundamental perspective is that people are starting to use Bitcoin not just as a nascent store of value, but as a form of commerce. And you actually have to build the technology for people to use it. That technology is out of beta, and people are using it more and more every day. A 1,200% increase in the fundamental usage of small-scale transactions like $5, $10 is a signal that Bitcoin is as healthy as it's ever been. The price of Bitcoin is also stabilizing around 27K, which is 3.5 to 4 times larger than before it dipped from 8K to 4K in March of 2020. A critical stat that we all look at, people who are paying attention to the market, nearly 70% of Bitcoin has not moved in over a year. To give context, that after the crash from Bitcoin to like when it first went to 19K to 3K, about 40% of Bitcoin hadn't moved in over a year. So 30% on a base of 19 million is a lot of Bitcoin in terms of nominal units of currency that have turned into long-term holders. And then importantly, the Bitcoin halving is happening in about 6 months. In my opinion, this is the most important market event that happens in Bitcoin. So what is the Bitcoin halving? There's this long-running debate in Bitcoin that the Bitcoin halving is priced in or not. My view of it is it's never priced in. Now is the right time to be in this room, to be paying attention, to be doing the work, to figure out whether you'd want to store value, because the halving is in 6 months. So what happens? How does Bitcoin enforce this fixed supply of 21 million? The rate of issuance gets cut in half every 4 years. So currently 6.25 Bitcoin are issued every 10 minutes. Approximately on April 24th, 2024, that number will be cut to 3.125. Every 4 years that happens until no more Bitcoin are issued. But critically, this drives a scarcity event in Bitcoin, and it's happening in 6 months. So to give that context, it's basically 900 a day going to 450 a day, 27,000 Bitcoin being issued each month to 13,500, 328,000 a year being cut to 164,000. But critically, what happens is today, in order to create that market equilibrium of a price of Bitcoin kind of roughly stable in the 27,000 to 28,000, is that translates to about 24 million of natural liquidity that has to be absorbed by the market in order to create an equilibrium. Well, overnight, the miners who are mining Bitcoin and securing the Bitcoin network, they only have 12 million of new supply after the halving. And this creates this market imbalance between supply and demand. And the market starts to find out just how scarce Bitcoin is. And to give people a perspective, because Bitcoin becomes scarce, more and more scarce every single year, but particularly at the halving event, that post the halving, 164,000 Bitcoin that are issued in the total year translates to 0.02 per person in DFW. And then when you start to think about the world of 8 billion people in the world, what that translates to an inflation rate is 0.8%. So at the same time that the Fed is going to have to be printing more and more money, Bitcoin is getting more and more scarce. This is the rate of issuance each year, the total number of Bitcoin that were issued, kind of dating back to 2012 to give you this perspective. So in 2012, 2.6 million Bitcoin were issued. Then 1.6 million, then 1.5, then 1.4, then 1, then 700,000. What will happen in next year will set the run rate to 164,000, and you start to see this asymptotic supply curve of 21 million. Currently, there's 19.5 million in circulation, and that translates to 92.9% of all Bitcoin that will ever be issued. 1.5 million more to be issued from here. And that less than 1% of people in the world own Bitcoin today. If Bitcoin credibly enforces its fixed supply, they're going to have, that other 99% are going to have to bid the 19.5 million from the current holder base. Ultimately, it comes down to common sense. I don't know how many of you guys are familiar with Sesame Street. They have this the Sesame Street segment called "One of These Things is Not Like the Others." And what I'm demonstrating here is the percentage rate of increase in the supply of Bitcoin, it both being predictable and going down each year. That's the left side. And then I show you the rate of change of the base money of the reserve currencies of the world, the dollars, euros, yen. So, and this is from 2011 to 2022. So the percentage increase in the supply of currency. So what you can see, those big spikes the last 3 years, that was 2020. That represents that the Fed created 80% more money of base money in a single year. The euro was slightly better at increasing 50%. The yen was over 20%. But this is ultimately what Bitcoin is competing against. And that each year, as Bitcoin becomes more scarce, it becomes more obvious to more people. Now, getting back to what's happening in the dollar world, because it is the problem that Bitcoin is solving. So this is the monthly year-on-year inflation rate that everyone is suffering from. The reality is, which I'll talk about, is actually far worse than this. But what the Fed and what Janet Yellen want people to focus on is that this really bad number that went from less than 2% to nearly 10% increasing year over year started to come down once the Fed started to raise interest rates. The problem is that inflation is cumulative, and what the Fed pays attention to really excludes the most important goods in the market, which are food and energy. And so what people in the market are feeling, and what all of you, it's like, I don't care if you're, maybe if you're a billionaire, you're not feeling this, but most people are feeling food at the grocery store costing more, gas at the gas station costing more. And when you look at food and energy, which are better metrics to measure inflation in the market, energy, price of a gallon of gasoline is 50% more than it was in 2020. It's not going down. Price of a pound of ground beef is 32% higher. That these problems all derive from the money printing. Establishment economists will go through great lengths to try to explain to you every other possible way that inflation is caused, but it's all this chart. And at the same time that Bitcoin is becoming more and more scarce, they're going to have to print more and more money. This is the current state of play. So the Fed massively increased interest rates, and there are massive unrealized losses sitting on banks' balance sheets. This is the reason why they're going to have to print more money than they ever have before. So the same thing that got me to Bitcoin in the first place exists today, and the alarm bells are signaling as loud as they ever have. And that the message that I tell people is, people are familiar with the fact that Silicon Valley Bank failed in March, and then First Republic functionally failed. And the same things that caused those bank failures were the rise in interest rates, and those same problems that existed then exist today. They're just bubbling underneath the surface. And one of the popular people in Bitcoin is a guy named Max Kaiser. He always says you can't taper a Ponzi scheme. My more kind of measured way to say that is that the Fed can never raise interest rates because the debt stack is always larger and larger. And so what I'm showing is going back to prior to 2008, the Fed raised interest rates aggressively. It caused a crisis. They printed money. In 2020, or really from 2018 to 2020, they tried to raise interest rates. It caused a crisis. They come back in and print money. Now they've raised interest rates faster than they ever have before, and it's going to cause them to have to print more money than they have before, because over this time horizon, the amount of debt in the US system-wide has grown from $52.7 trillion in 2007 to $97 trillion today, or $96 trillion. This is the chart that ultimately got me into Bitcoin. This is the most important chart to understand the fiat system. That back in 2007, there was $52.7 trillion of debt in the US system. That's very vanilla mortgages, auto loans, student loans, credit card debt. That's not unfunded pension liabilities, and it's not derivatives. It's just very vanilla, anything that you would traditionally consider a debt instrument. There was $52.7 trillion, and there was only $9 trillion in the entire existence of dollars. So the total system was leveraged over 50 times, and there was ever actually fewer dollars that existed in the banking system. So if we go to the period before 2020, when they had to print a bunch of money, the debt stack had grown by over 20 trillion. That is what necessitates that they will have to print more money. Where do we exist today from that period prior to 2020? Again, the debt stack has grown by over 20 trillion. The reason why they always have to print more money is because the introduction of new dollars actually induces the expansion of credit. It's what it's designed to do. We start from a world where there's too much debt. They have to introduce more dollars to be able to sustain existing debt levels. What does that do? It caused the debt system to grow, and then when they try to reverse out, they have to print more money, otherwise their credit system collapses. This is the money printing. It's my slide where I say, fool me once, shame on you, and it's appropriate that we got a massive mural of George Bush out there. I'll just read it so I don't screw it up, because I often screw it up just like he did. But fool me once, shame on you, fool me 4 times, shame on me. And I have a quote. I have 2 quotes here from Paul Tudor Jones, who's, I like to think of a very traditional investor, as to why he adopted Bitcoin. So I'll just read it so I don't screw it up. It says, and he's describing the money printing episode from March of 2020 to May of 2020, and he says, it has happened globally with such speed that even a market veteran like myself was left speechless. We are witnessing the great monetary inflation, an unprecedented expansion of every form of money, unlike anything the developed world has ever seen. That was May of 2020. And then in the same investor letter, when he was explaining to his investors why he adopted Bitcoin, he said, I also made the case for owning Bitcoin, the quintessence of scarcity premium. It is literally the only large tradable asset in the world that has a known fixed maximum supply. By its design, the total quantity of Bitcoin, including those not yet mined, cannot exceed 21 million. I don't say that people don't buy and sell Bitcoin for other reasons. I don't say that people don't speculate in Bitcoin not knowing these things. I say that the people who find the signal find it for the very reason that I put forward to you, that Bitcoin has fundamental value in the world because of its fixed supply, and it's ultimately solving the problem permanently of printing money. Where we've at been at in these last 4 cycles of all this money printing, what I put forward to you is that we're in the exact same position. They are going to have to print more money than they ever have before. And when they do, more people are going to figure out Bitcoin for that reason. But for you guys in this room, you don't have to wait till the next episode of money printing. You can go ahead and take action before the flood. There's 2 key differences between the Bitcoin system and the fiat system. The fiat system, when it's exposed to stress, becomes more fragile. It becomes more fragile because of more debt and ultimately more money being printed. Bitcoin is the opposite, is the anti-fragile competitor. It doesn't matter what happens in the Bitcoin system, the thing that everybody can count on is the fixed supply. The market has to respond to failures of institutions that lent people's Bitcoin out like FTX. But that is the Bitcoin system working. It doesn't matter how many institutions fail. The one thing we can all rely on is that Bitcoin and its fixed supply cannot change. And that because of that, whereas the fiat system, when it's exposed to stress, it becomes more fragile, Bitcoin's the opposite. Bitcoin gains strength because rather than change the supply, everyone has to deal with the volatility and respond to the market conditions and absorb the volatility. Ultimately, coming back to this chart that I showed you before, that Bitcoin's fixed supply becomes more credible, that in the face of all these failures from 2022, if you guys are familiar with it, great. FTX lost 70,000 Bitcoin. A company called BlockFi lost about 50,000 Bitcoin. Celsius lost 150,000 Bitcoin. There were no bailouts. Each time there are no bailouts, Bitcoin continues to function, Bitcoin's fixed supply becomes more credible. Everything revolves and centers around this, and when the market sees that happen, more and more people figure it out. This is the price of Bitcoin on a non-log basis. I like to describe Bitcoin, this will be my last slide before I take questions, but it is that Bitcoin is the greatest asymmetry to ever exist in the world. Most of you guys are familiar with the nature of asymmetry, but it's simply an asymmetry relative to downside versus upside. It can be the reverse, which is part of why Bitcoin is the greatest asymmetry to ever exist. I say that it's the greatest asymmetry to ever exist because no event could possibly be more positively asymmetric than the world adopting a new form of money. You could look at me and you could say that it's crazy, but that's what asymmetry is inherently about. Even if you ascribed a much lower probability to the event than I would, you still have to recognize that if the world were adopting a form of money, that event would be massively asymmetric for the holders of the currency. Now, this is what I put forward, is that most of the asymmetric events are low probability. Bitcoin adoption is probable. There's a finite surface area. You might not understand how Bitcoin enforces a fixed supply of 21 million, but if you can start to appreciate that that is the signal, then you start to have a baseline to evaluate the problem. It is a known surface area, and you can actually figure out for yourself whether or not you think it to be true. Because if you think it to be true based on your own reason and logic as to how Bitcoin enforces its fixed supply, then the event is probable. The other side of it is there's negative asymmetry to hyperinflation. I don't raise the idea of hyperinflation to be fear-mongering or to scare people, but if they print $5 trillion and they're going to have to print way more money than that, there is a reality that human beings cannot continue to be compensated for their finitely scarce time in a form of money that it costs nothing to produce. Every instance of hyperinflation that's ever existed in the world comes about because of printing money. They've printed more money than we can possibly conceive of. In the last 3 years, they did it post-financial crisis. They're going to have to do it again because of that imbalance between that 96 trillion of debt that exists in the world and the only $8 trillion that exists. And so even though they've printed a ton of money, all that induces is the need for ever more. And I highlight for people here the move from 100 to 1,000 in Bitcoin, because the thing that I struggle with the most at the end is what most people struggle with the most, is that, well, haven't I already missed it? A single Bitcoin costs, well, when I did this, it was 28,000. I think it's about 28,000 now. But that was the same way that I felt when I was adopting Bitcoin, right in the middle of that when it was $500. But I've never sold a Bitcoin, and Bitcoin is just as cheap today as it ever has been because still very few people own it. And that where Bitcoin is today, 28,000, will look the same way that 100 to 1,000 move looked when 10x the number of people adopt Bitcoin or 100x the number of people adopt Bitcoin. That people adopt Bitcoin if they find the true signal because it's the solution to inflation, not because it's a hedge to inflation. All of that centers around a fixed supply of 21 million. And if you can start to see on this chart where there was a rise and fall, but there have been many more in the past, and Bitcoin never goes down to those prior highs and lows for the reason that it is finitely scarce and knowledge does distribute as a function of time. More people figure it out. You don't unsee Bitcoin. And the last point that I make is that Bitcoin scarcity, while everything revolves around it, all fundamental value derives from the fact that there will only ever be 21 million. If you do not understand Bitcoin, how it works, why that is the case, why that's relevant, Bitcoin scarcity cannot be of value to you. That's why it's not a hedge. That's why a lot of people panicked and sold Bitcoin when it was 16K, and now it's sitting at 28K, and people are figuring out that Bitcoin didn't die and the Bitcoin halving is happening. But most of the world doesn't know about that. But again, I can talk to you about these ideas, but if you do not understand it, if you do not have the knowledge, it's not of value. I have a picture of my book that's soon to be released, not yet out, but I help people understand Bitcoin because I find it to be a moral imperative. Unchained helps people understand Bitcoin. But there's another side of it, that scarcity and Bitcoin's fixed supply cannot be of value to you if it's possible to lose. I secure my own Bitcoin with Unchained. It's money under the mattress. I don't have the counterparty risk of the company. Nobody who operates with it. A lot of companies failed. But if you think about that idea, all value in Bitcoin starts and stops for the reason that there will only ever be 21 million Bitcoin. If you do not understand that, Bitcoin cannot hedge inflation for you. You will panic and sell it at the absolute wrong time. And if you were to put it in an institution that blew up, like an FTX or a BlockFi or a Celsius, did Bitcoin store value for you if it went from 1,000 to 28,000? It only stores value for you if you know what to do with it, and Unchained is the best at that. So with that, I will pause and open it up for questions. So the question is, what happens to the American banks if Bitcoin becomes the unit of account, the reserve currency? I think that the banks that adopt Bitcoin will do very well, and the banks that don't have Bitcoin on their balance sheet will fail. I believe that, ultimately rational economic actors, if you're a bank, you'd rather lend hard money than soft money, and banks will figure that out. So just like, in many ways, practically speaking, Bitcoin will functionally end, it doesn't end banks, it more so ends central banks, like the Fed and the BOJ and the ECB or the Bank of England. Now, the reality is, if somebody wanted to have a central bank, there's nothing inconsistent with Bitcoin and the idea of a central bank. The key difference is you would just have to capitalize the central bank. Gone will be the times that central banks will be able to create money out of thin air. If people want to have the Fed and tax us and take some of our Bitcoin and put it in the Federal Reserve, we can have a Federal Reserve, but if they lend the money out and they lose it, no takebacks, just like the same applies to all of us. So I think it just depends as to whether or not the bank themselves individually adopts Bitcoin early enough to be able to benefit from it and survive. Short answer of it is 2140 is approximately when the last fraction of a Bitcoin will be mined. I like to think about it like a mortgage. When you start out with a mortgage, it's primarily all interest and a small principal, and then by the time someone pays down a mortgage, it's virtually all principal and a small amount of interest. Bitcoin miners principally do two things. When I talk about Bitcoin being valuable because of a fixed supply of 21 million, you don't get something of value in the world without cost. The cost that secures the Bitcoin network is real-world energy. I talked about that with the mining hash rate. Miners are principally paid in two ways. They are paid in new issued Bitcoin, so 6.25 every 10 minutes currently, that being cut in half in April to 3.125 Bitcoin, in addition to transaction fees. So every time a Bitcoin transaction is set, a small amount of Bitcoin is attached, and that is paid to the miners. So I think about the miners doing two functions. They enforce the fixed supply of 21 million, but they also clear current Bitcoin transactions like the New York Fed clears dollar transactions. In return for those miners transacting and clearing Bitcoin transactions for final settlement, the people who are sending the transactions actually pay Bitcoin miners in Bitcoin, so current holders of the currency. And the way, again, I think about that is that at the end of the day, if the fixed supply of 21 million holds, there's going to be so many people demanding Bitcoin and demanding Bitcoin transactions that just like today, the Bitcoin transactions have a real purchasing power, the fees, more than when 50 Bitcoin were being issued when Bitcoin was just launched, that will continue to hold because as the purchasing power of Bitcoin goes up, the nominal amount of Bitcoin issued goes down, but the real purchasing power of those issued Bitcoin actually continues to go up for the reason that it reinforces scarcity. So short answer is 2140. Longer answer is transaction fees will replace the value that's paid via issued Bitcoin, and that what really matters is the real purchasing power of the Bitcoin being paid to miners. But there will always be an incentive to secure the Bitcoin network, both for clearing transactions as well as ensuring that there will only ever be 21 million. It's competition. There's a fixed, without getting into too much details, just as there's scarcity in the supply of Bitcoin, there's scarcity in the amount of data that the Bitcoin network can process in a valid Bitcoin block. That scarcity of kind of data processing creates a bidding up of kind of the finite digital real estate. That is what ensures that there will always be a market for fees. Yeah, so I agree with you. I think the sentiment is perfectly right that the Fed and the Treasury are not going down quietly. And it's also not a position of one of hubris. It's recognizing that like that's not a good reality. But I go back to a few markers of like kind of playing out my thought process. It's that every currency that's hyperinflated, there's been 50 to 60 instances of government currencies hyperinflating. Each one of those was in the same position that the Fed and the Bank of Japan and the Bank of England are in. That basically a central bank can control the supply of its currency, but they can't make people value it. And if they abuse the power of printing money, the currency fails for reasons that it degrades and can't coordinate trade. And so from my perspective, I recognize that there might be some fight. And I'll walk you through what I think actually happens. A fight, not in a kinetic sense, but in a fight of like the Fed and the Treasury coming down harder on Bitcoin. Now, my logic, the way I apply it is they only do that if it becomes more and more apparent that Bitcoin is a threat. If Bitcoin is a threat, it's only a threat because the fixed supply has held. And a rational economic actor would rather be in the position of having owned the asset that preserved purchasing power to then have a future decision point than to have made the decision long ago by not owning Bitcoin. Now, what I think actually happens is that the US government ultimately figures out that it needs Bitcoin too. And that every government figures that out. And that they're actually going to have to own Bitcoin, and that the way they're going to do that is through some sort of acceleration of unquote unrealized capital gains, where they're going to walk up and they're going to say, hey, you guys owe us 30 to 40% of your Bitcoin, and we're going to recapitalize the US government and the US Treasury. Because a currency failing for the reason that they printed too much of it and it starts to fail to coordinate trade, they can't stop that just like any other country that's come before them. Equally as powerful countries or empires. And so I agree with the sentiment. I think that there's going to be then they fight you, but then there's always going to be a perspective of rationality, because the government to fund a military, to fund Social Security, they're going to need a working form of money too. And that when the US government banned private ownership of gold in 1933, gold didn't cease to exist. They just then devalued dollars. The people who had gold had a decision point. Do they hand it in or do they not? And then similarly, when the government tried to ban booze, again, something that people demand because it has fundamental value will continue to exist in the world. What I put forward with Bitcoin is that it's 10 to 100x harder to stop than something like gold or to ban, and it's 1,000x times more valuable to humanity than booze, and people will find a way to use that. And the most likely scenario is that the government recognizes that they need it too, and that they kind of seize it in a way by accelerating taxes. But even in that world, you'd rather own Bitcoin than not. I think, I will share that. I think moral imperative from helping people, I think is close to the vest. My friends and family first, my extended network, because, and I'll get to there, because Bitcoin is going to be a good, and probably the only good that can lift billions of people out of poverty, because sound money is what is required to build civilization and build trade and make trade more sophisticated. And so if you are somebody living, and that is an important recognition, that 2/3 of the people in the world, 3/4 of the people in the world don't have a form of money that can allow them to participate in an economy where they have an incentive to consume less than they produce. Bitcoin is inherently a store of value. It will work as a store of value for anyone. I think there's something kind of comical where Bill Gates is out there in Africa trying to build toilets, but they don't have reliable power. Bitcoin will provide a currency that will allow for people in impoverished places to develop energy resources and to have a currency that when they trade to allow it to store. So that is true, and Bitcoin will be a great good in the world, but money serves to store value. I like to think about it as the developed world has the greatest incentive because they have the most to lose. They have the most wealth to lose. That is what money does. It helps store wealth and it helps us carry forward. People in the developing world probably have the most to gain because they've never had a form of money that has the properties that Bitcoin does, and that finite scarcity works just as well for Paul Tudor Jones in New York as somebody in one of the poorest countries in the Western Hemisphere like Nicaragua. So that is true. It's just each individual has to act in their own self-interest. That's where we get to the better side of money printing. Yeah, I really think it's a fool by randomness. I think that the number of people that own Bitcoin and understand it is far smaller than that number. The embedded number of people that view gold as a flight to safety today is actually much higher. So I think it is rational. I think that the reality of the situation is, and I've experienced this personally just because I go out and I talk to a lot of people that are similar to you of having bought Bitcoin, where there are probably certain people in the world that figured out Bitcoin because of what's happening, combination of the Middle East and Russia. Partly because they figure out that, wait, we're just going to allocate another $100 billion to the war complex. How does that make sense? Or when Russia got cut off from SWIFT. But it's not necessarily, it's in a mass way, it's not possible for singular events to speak to, 90% of people except for hyperinflation. So I think that it's more idiosyncratic. Gold is a more traditional, quote, flight to safety, so it acting as that. But the distinction between gold and Bitcoin is the people that are buying gold really are just buying dollar instruments. They're trading gold to get more dollars, and it's generally financial speculation. What I put forward is that person that figures out that Bitcoin is the solution to inflation, they're not just trading Bitcoin to get more dollars.